Hey everyone, Coach Investor here back with another What Happened This Week in the Stock Market. As always, some topics were already covered during the week. Those topics you can find in the top right corner. But in this one, we're going to discuss Disney, Affirm, the inflation, and whatever is happening in Russia, Ukraine, and the United States. All of that will be covered in this video. Also, this video is sponsored by the Daily Upside, a free financial newsletter that you get into your mailbox every morning. You can read that in just 5 minutes. If you want to sign up for free, link down in the description and in the pinned comment. So, first order of business, we're going to start with the house of mouse, which is Disney. So Disney beat on revenue and earnings per share. Earnings per share were $1.06. Estimated one were 63 cents, so a huge beat on that. Revenue came in at $21.82 billion versus an estimated $20.91 billion. All right, so obviously this quick overview right here, you can see huge improvement year over year, but that's to be expected. Last year still heavily hit by the pandemic. So everything is going back to normal. And maybe some say we'll be coming even out of this pandemic much stronger. Now with regards to the various segments, so Disney Media and Entertainment Distribution grew 15% year over year. Disney Parks, Experiences and Products grew over 100% year over year. That's totally normal. Right now, I believe all parks, if not most parks, are open. And some reports even said that there are huge lines outside. So the parks are pretty packed, which is great. But it's very important to mention that a lot of the revenue coming from parks, experiences and products is usually coming from international travel, which is still not back to pre-COVID levels. So there's still a huge potential there, let's say maybe during the summer, towards end of this year. And all of those positive effects can be reflected in the total segment operating income growing over 100% year over year. And as for the direct-to-consumer products, we can see that everything is going the right track, right? Total Disney Plus, so Disney Plus plus Hotstar grew 37% to 129.8 million. ESPN Plus, huge increase, 76%. Normal sports are back, so are the viewers. Total for Hulu grew 15% to 45.3 million. During the call, they say that they are still on track for the 2024 goal of having between 230 and 240 million subscribers. And as for pricing power, right now Disney Plus is still fairly cheap compared to Netflix, and that's normal, right? Netflix is offering so many choices, movies, TV shows, you name it. But as you can see here, very positive trend. Disney Plus, 50% growth. They will still be increasing the price over time. But right now, as I said during the call, they're working on content. And during the summer, Disney Plus will be available in another 42 new countries. So that will obviously boost the subscriber growth. So keep that in mind. Disney, again, I always said this, Disney right now, you can think of it as getting Netflix plus Hulu ad side, ESPN Sports, and parks as well. Right now we're still, I believe, still in the early innings because remember, Netflix is not monetizing with ads, which is a shame. I think if they did that, they would be much bigger. Disney, on the other hand, is doing that. Plus, it's Disney. They have the brand, they have the parks, IP, you name it. So to me, I'm a big fan of Disney. Obviously, I've been holding for a while. So that's it for the Disney part of this video. Next up, I'm going to talk about Affirm, but first a little word on the Daily Upside. So the Daily Upside is a free business and investing newsletter that over 200,000 people subscribe to, myself included. Instead of pushing clickbait financial titles and biased coverage, the Daily Upside provides actionable insights and clarity on the stories shaping the business world. It has become the first thing I read in the morning. It's about a 5-minute read, so it's not that long, and they aren't afraid to dive into the hot topics and give a real, high-level, unbiased analysis. Recently, I have also been enjoying their weekly edition newsletter that goes a level deeper into niche industries, so that's great if you have time on the weekend to read a bit more. As someone who looks to stay on top of news to create videos just like this, I can't recommend the Daily Upside enough, so if you want, you can sign up using the link down in the description below. It's free, you can always unsubscribe later. Alright, so Affirm reported earnings this week. Before they reported earnings, there was a little leak on Twitter from their social media intern, it would seem. So they tweeted out another great quarter in the books as we accelerated our growth, leveraging our superior technology and putting people first, equaling increasing total number of transactions by 218%, active customers by 150%, GMV 115%, and revenue up by 77%. Tune in today at 2 p.m. PT. Obviously, this was released way before the market closed. As you might have seen, the stock went up, I believe 10-11% or so. I tweeted out, leak now, might report later is the new buy now, pay later. But what happened next is obviously the stock crashed. It crashed even before the market closed, and then when they reported earnings, it crashed even more. So let's look at a couple of numbers here, because although the stock crashed, I do believe that Affirm is doing the right thing. Growth is there. Obviously, you could have seen it in the tweet as well. So we can see here that they increased active merchants from 8,000 to 168,000 and active customers by 150% year over year to 11 million. It accelerated year over year GMV growth to 115% from 84% in Q1 2022. So let's have a quick look here at a couple of key numbers. Gross merchandise volume, or GMV, for the second quarter was $4.5 billion, an increase of 115%, excluding the impact from the completion of the initial rollout of Affirm's interest-bearing solution with Amazon in November. GMV doubled. Transactions per active customer increased 15% to 2.5 as of the end of the quarter. Obviously, the more transactions, the better. Right, then we have total revenue of $361 million, 77% increase, driven by increase in network revenue resulting from GMV growth, higher interest income related to growth in loans held from investments, gains on sales of loans due to higher forward flow volume, and greater servicing income as the platform portfolio scaled. Then they continue by saying that total revenue less transaction cost increased 93% to $183.6 million, primarily as a result of the strong revenue growth, as well as slower growth in transaction cost as the company achieved scale efficiencies. Now, obviously, they are still losing money, so adjusted operating loss for the second quarter was $7.9 million compared to $3.1 million just 1 year ago. And last few things here, they completed the initial rollout of Affirm's first integrated point of sale solution at Amazon in the United States back in November. We might see those effects probably in the next quarter. Introduced Affirm's new super app and browser extension in January and cashback rewards in December. So that as well. Next quarter, we might see more positive effects from that. Again, super app is a word just like metaverse. It's a nice word to sell something. As for the outlook for fiscal Q3, they expect GMV to come in between $361 billion to $3.71 billion. For the fiscal year, around $14.6 and $14.8 billion. Revenue for next quarter is expected to come at the midpoint of $330 million. For the full year, $1.3 billion. So that was Affirm. Obviously, some people looked at it and said, so how will Square perform well? Because, well, Square right now is apparently just a buy now, pay later product because they acquired Afterpay. Some people still forget that Square is much more than that. Obviously, the effect of Afterpay will only be seen in the longer term future, but there is some good news with regards to Square. So Plant here on Twitter tweeted out that bit of a tinfoil hat theory, but Marqeta just raised guidance before earnings. Square's Cash App is 60 to 70% of revenue. If Cash App is re-accelerating, it will surprise, plus Square seller has been accelerating into post-COVID normalization, so we could see some surprising results. And I will agree with him, I think Square will surprise us all. We've seen Visa and MasterCard, obviously we've seen PayPal, but Square is growing faster than PayPal. Marqeta raising guidance, that's great as well. A lot of people are still confusing the fact that Bitcoin cryptocurrency doesn't really affect Square that much. It's such a tiny segment. But if you look at the business, if you watch the videos I made, you see that Square seller side has been accelerating coming out of the pandemic, which is great. Cash App, obviously, I hope we'll get the monthly active users again, that graph. I know they talk about it sometimes during the call, but I would like to see this in the report as well. Obviously, I will make a preview video for Square and then a video on the day of earnings. Now, let's talk a bit about inflation, just a quick headline. So it was announced this week that inflation reaches 40-year high with prices up 7.5% in the last year. New CPI reports shows. CPI, Consumer Price Index. Now I do want to say that those are year-over-year comparisons. Obviously, in the second part of the year, we will not see such a huge difference in year-over-year comparisons because, well, inflation or the realization that inflation is here already started at the back half of last year. So maybe, let's say, I don't know, in September, October, you'll see those reports and suddenly it's maybe 1%, maybe 0.5%, maybe it's even going to be negative. Who knows? But right now, yes, those are scary headlines. I do feel that things are getting extremely expensive, especially if you drive a car. Right now, it's costing you a lot. But yes, there is inflation, prices are rising. The Fed should have done something a long time ago. Right now, this is what we can do. Just wait and see. Hopefully, they'll act pretty soon. Next topic and last one is obviously Russia, Ukraine, the United States. So, on Friday, Biden said that Putin is ready to invade Ukraine. Then on Saturday, they had a 1-hour talk about the situation. Honestly, I don't think anything is going to happen. Anything happened during the call. One said, we want to do this. The other is sleeping and probably said, okay, but we're not going to allow you, blah, blah, blah. I do have here a comment that I found from Fire Up Wealth. One of his subscribers said that, hey, Eric, I'm from Ukraine and here it is absolutely quiet and nobody panics at all. Of course, we cannot know for sure whether Russia will attack us. We believe that this will not happen. And he continues by saying something about 2018, blah, blah, blah. So there is that. I don't know if that subscriber is telling the truth. Maybe it is, maybe it isn't. There's obviously something going on there at the border. But there's also something that went on a month ago in Kazakhstan and nobody is talking about that because maybe, I don't know, it's something that the news doesn't want you to know. Maybe somebody in the United States doesn't want you to know. I highly suggest you Google what happened in Kazakhstan in January. Your mind will be blown. Now, this might be just a tactical political game. This is probably somebody deep in the United States, probably not Biden, probably somebody else, playing a tactical game here with Russia, with Ukraine, China, etc. But Russia, Ukraine, what's going to happen? Honestly, nobody knows. All right. Everybody will talk about, oh, I know this, I know that. Nobody knows. Biden doesn't know. Putin probably does whatever he wants. If tomorrow he goes in, he goes in. If he doesn't, he doesn't. That's the reality right now. Obviously, if there is a war, I don't really care about what happens with my portfolio right now because obviously a war is a bit more important than whatever happens with my portfolio. A lot of people think, oh, if Russia invades Ukraine, we can buy the dip, buy this. This is really what you're thinking? Russia invading Ukraine and you think about buying the dip? Anyways, this will be it for this video. I'm sure it's a bit long, but hey, it's a weekly thing. So there you have it. Do share your thoughts down in the comments below. Check out the Daily Upside. Subscribe if you haven't. Like this video if you liked it. And I'll see you all in the next one. Bye bye.